dragged it up. Instead, the line would go kind of up with, up underneath the stock. And as it went across, I noticed that it would bounce from that line. I was like, okay, I got to figure out what this VWAP is, because when it bounces from that line, that just seems like easy, free money.
February 6th, 2026. Let's go over the trades I took today, and let's talk about what's going on with NASDAQ. So we've been having a very aggressive sell-off with regards to the price action, and we always go over the momentum every day at the close and every day before the market opens. We look at the momentum. Why? Because momentum can be interchanged with the word probability. As momentum increases, so too does the probability of certain outcomes. So 6 market days ago, we had a turning point, a tipping point where the momentum stalled. 5 market days ago, we had confirmation that the momentum had now flipped to the selling side. And we've been in a large sell-off ever since. And I say large, it's really normal. And today we had our first fight back. Look at this, another tipping point. Doesn't mean it's going to go up on Monday, the next market day. But it just means the momentum has reached a point where stalling has occurred. It might be a tipping point. And notice our volume is increasing over the past 10 to 12 market days. You can see volume is literally increasing. There's likely going to be a push up, just because the market's always going up. Here's the monthly chart, and the market's always going up. It's just a matter of being patient and watching the momentum. We're going to go into the daily activity we took today and see our trades. We took many trades today. We took a lot of trades. Every yellow line is a trade I took, and that's 7. And we're going to go into a mistake I made. But first we're going to talk about my trades, and then we're going to go into the mistake. First trade was right here, 9:34 a.m. We get a tick up on the histogram. We get a huge volume confluence. Our 5-minute data is aligned to the upside. And we've got our 30-minute and our 2-hour momentum all aligned. This is what's called a fractal 4, which is the highest win rate strategy that I've been able to design. Enter at the close of the candle, stop loss slightly below, sell majority of your position at that first level, which is essentially a 2-to-1, and that was a win. Now, the other trades I took happened later in the day. Notice the market time is almost 10:30. I try not to trade between 10:30 and 2. I try not to trade the middle of the market. Sometimes I miss really good moves. Other times I take trades in the middle of the market and they seem like they're not really worth it. So right here we had a pop up where our momentum's going down. We have a pop up. Our 5-minute momentum is strong to the upside. We're still in the middle of a fractal 4 technically. And we get a volume confluence. But notice something interesting. I hope you already see it before I even explain this. What happened right here at this prior candle? We also got a volume confluence, but the MACD histogram did not move upward. It didn't signal and confirm the momentum switch on the MACD of this 1-minute chart. This is what I call a ghost power volume bar. Our MACD histogram is going down. While this is going down, our price is holding steady. We get a volume confluence to the upside on a bar which made a higher high than the previous bar. That was the entry that I should have taken. That's why I marked it. The only reason I didn't is because something was missing. That's what these gaps mean. I want to take the trade, but something's missing. That something that was missing was the histogram not popping up. Very interesting. I call this a spring, a fractal 4 spring, when we have all of our higher time frames aligned to the upside, yet the histogram is cooling off. The momentum is cooling off. The momentum is recharging. And when I saw that volume confluence, I should have hopped in, especially knowing that that volume confluence aligned with a candle that closed above the previous candle. Anyway, the next one was also a volume confluence, just by a little bit, and with this time we did pop up. So I entered the trade right here at the close of the candle, stop loss slightly below. It never hit my target, hit stop loss, that was a loss. Unfortunate. Next trade was right here. Why? We're coming up. Our momentum on the 5-minute is kind of holding but not really. It's actually tapering down. It's not expanding like we like, but it was holding momentum. And instead of entering right here at this 2x3 volume confluence, 3 candles, last one is greater than the first one, and 2 or more are aligned with the direction of the trade. Green for up, red for down. So instead of entering here at this 2x3 entry, which would have been a win, because the stop loss would have been here, the target would have gotten hit, I waited until this power volume confluence occurred, which was the next candle, meaning that this one never got a chance to win, because by the time my stop loss was hit, the target had never been hit, so that was a loss. Next trade on the day, right here. What do we see? A volume confluence, volume bar greater than the previous 3. Our 5-minute energy has been working up. It's a little bit hard to see, but look, this MACD is now working up. The histogram bars are working up. That's momentum building to the upside on the 5-minute. Still along a fractal 4 framework because the 30-minute and the 2-hour are aligned to the upside. Took this trade right here. This was a win. Entered at the close of the candle, stop loss slightly below. That first target got hit, and that's where we sell the majority of our position to lock in the win, allowing roughly 10 to 20% of the remainder of the position to continue running to get more and more profits, or to fall back and maybe hit a stop loss near your entry or wherever you may have it. Next trade, right here. Don't forget, we're going to go over my big mistake for the day. Now this trade was obvious. Our 5-minute had been selling off for a while. We've got steady momentum building to the downside, which means we can take short trades. Our 30-minute histogram has finally broken to the downside. That's one little gate of permission we need to take shorts against a strong upward current. So we see a volume confluence nowhere. We don't have a volume confluence anywhere. I took this trade because I saw heavy price action, like I was watching the price action move very rapidly. I saw that we had been consolidating and momentum had been stalling for a long time, almost 10 minutes. And then boom, we get a fat candle down, which breaks the wedge that I was tracking. You'll see this wedge right here is why I took the trade. I saw this wedge forming. When this candle emerged, look what it's doing. It's actually breaking the wedge. That's why I took the trade. Entry right here at the close of the candle, stop loss slightly above. Sell the majority of your position at that first target. Target was hit, that's a win. Then I got faked out. This rectangle you see, this box of consolidation, I marked it with a rectangle. And then look what happened right here. My next trade. We started to break through this level. We get a volume confluence. There was clearly other people who were seeing the same thing as me, clearly. Or at least they were thinking the same idea. This is probably going to go down from here. And it never did. And notice I had a warning sign. This 5-minute MACD was not holding to the downside. It was building upward. It was going against the trade. Going against. Okay, one little pop down. Nope, going against. Okay, another pop down. So this wasn't strong. There was no strong confidence here. I immediately got stopped out on that trade for a small loss. And my final trade of the day. Look at this run up, first of all. Look at this run up right here. Look at how these candles are just, it's like a robotic, perfect. That only happens for one reason. Sustained purchasing. This is the end of the day, the final 20, 30 minutes. A lot of people, a lot of firms, a lot of institutions and banks. The reason that we have clean symmetry like this is because a lot of buying end-of-day algorithms are being initiated. That's what this means. That doesn't happen for no reason. We don't get perfect lines like this for no reason. Look what happened at the 5-minute level. 5-minute was building strong momentum to the upside. A lot of momentum increasing. We're still in the midst of a higher time frame upward current. This is an upward day so far. If we zoom out, for example, and we look at just a 5-minute chart, right? For today. We just look at the 5-minute scope of the day. What's happening? We've got a strong upward current occurring still. This is the end of the day that we're about to discuss. But leading up to this end of the day, leading up to this final moment, we've got a large bias, that we've got a lot of buying going on. So when this happened, when we got this volume confluence, when we had this pop up, when we have this supporting variables, you know I took this trade. I entered right here at this purple line, stop loss slightly below. That was a hit target, that's a win. All in all, it was a good day in the market. It was a good week for me because I passed my rite of passage. 16 trades in a row without breaking rules, without deviating, without taking profits too early. We're going to go over my big mistake of the day. I want you to look at this. I'm moving these out of the way so we can see this. This purple line is VWAP. This purple line. You see this purple line? This is VWAP. VWAP, volume weighted average price. This is one of the most... You'll see price action interact with this VWAP line many times a day. It's an extremely crucial level because it's showing you who's in control, the buyers or the sellers. It's showing you many things. It's a very important line. We had a big run up right when market opened. Huge run up. Cooled off. Didn't break the lows. Cooled off. Hit VWAP. Rejected. Hit VWAP. Consolidated above. Broke back down below VWAP. We only get a little bit below VWAP until this large monster candle happens right here. It's not a volume confluence, but it is a large candle. This one right here. See this? Remember, we're going over my big mistake for the day. Pay attention. It's extremely important. VWAP is an extremely crucial level. We broke past it. We came back. We broke through. We broke past it again. We know we're in a strong upward current because we've got these momentum stacking in our direction, but also from the price action alone. Huge run up. Cooled off, didn't break these lows, consolidated, another cool off. So now we're going back again. We've been selling off for many days in a row now. So, the pressure is bound to reverse at some point for a little bit of a run-up day. What I'm trying to tell you is right here, just because we had weak 5-minute data, look at the 5-minute data, we had a sell-off. Just because we had weak 5-minute data, did I not take this trade? This was a volume confluence on the right side of the momentum. Momentum not going with us. Okay, now the momentum's going with us. We had a volume confluence. I wanted to take this trade so bad, and I didn't. And I've got to follow that intuition way more often. I knew we were in the middle of a fractal 4. The 2-hour was going strong. 30-minute, aligned. 5-minute, just had a cool off. But because this MACD wasn't expanding in the correct direction, I didn't take the trade because my rules are so strict. But this was going with it right here. This was going with it. We had a volume confluence. Look at this trade would have been a grand trade. It never would have come back. Would have been huge profits. But I didn't do it. So now, moving forward a little bit, we go forward a few bars right here. The MACD is now building. The 5-minute MACD momentum histogram is now building in our favor, in our direction. We're in the middle of a fractal 4 alignment. We're crossing over. We get another volume confluence. Ding, 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 ding. Everything's telling me to take this trade. And I didn't take it. That was my mistake. This is what I need to remember forever. This kind of situation right here, just because the 5-minute momentum might not be beautiful, expanding in the direction of the trade, it doesn't warrant me skipping these opportunities because we were in the middle of a strong fractal 4. 30-minute, aligned with the 2-hour. This is a huge current. When this alignment happens, that's something to take seriously. And I wasn't taking it seriously enough. I was letting this little sell-off on the 5-minute get to me. So anyway, just had to go over that. I regret not taking this trade because I knew it. And why did I know it? Where did the added conviction come from? Yes, I might not have had the 5-minute momentum stacking back in my favor. Sure, I might not have. But what did I just see? What did I see with my eyes? Huge run up. Sell off, didn't break the lows. A run up again, penetrating plane with VWAP. Cooled off again. Repenetrated through VWAP for a third or fourth time. We're never breaking lows. Here's a low right here. Here's a low right here. We just made another low. We're not breaking lows. We're making higher highs. We're making higher lows. So when I saw this and when my intuition was triggering to take this trade, man, I should have done it. I'll remember that for next time. I hope you're having a good one. Take care now.